Welcome back. State securities regulators yesterday urged Congress to investigate something called high-frequency trading. High-frequency trading is the practice of using powerful computers to trade large volumes of securities very quickly. The days of trades being made by human beings has largely been replaced by this: supercomputers buying and selling in microseconds. The practice can put individual investors at a disadvantage since they typically don't have access to the same information and often buy and sell at less favorable prices. So what is high-frequency trading and how should it be regulated? Should it be regulated? To explain, we're joined by Wallace Turbeville. He's a senior fellow at Demos, a public policy think tank. He's also a former investment banker at Goldman Sachs who has now turned his focus to financial reform and is out with a new report on high-frequency trading. It's part of his series on financial regulation called Cracks in the Pipeline. Wallace, thanks for a few minutes. Appreciate it.
Thanks, Andrew, for having me.
We've seen some instances of this popping up in the news, the flash crash from a couple of years ago where the market moves hundreds of points literally in seconds. Is that the real risk here, or are there other things that we should be worried about with high-frequency trading?
Well, I think the flash crash was notable. I mean, because in a matter of 10 minutes, $1 trillion disappeared from the marketplace, and within another half hour, it all came back, and it was all because of the trader robots taking control of the system and spinning out of control. But I think that while that's a story that has obviously a lot of appeal and a lot of interest, actually more important is the fact that high-frequency trading, these computers coming in and out of the market, not providing any investment, but coming in and out of the market constantly at periods measured in milliseconds, thousandths of seconds. What's really happening all day long is many flash crashes going on all day long. And the market has been shown to move up and down, having nothing to do with real intrinsic prices and values. So what goes on every day is probably more important than even the big events that might occur and get a lot more press.
You know, my first reaction when I was reading up on all this is, this just feels unfair to me. I mean, I don't have a supercomputer at my disposal. I got to try to get on with my Wi-Fi. Is that something that folks at home should be concerned about, that it's simply tilting the playing field towards these big corporate entities already, or are there additional concerns?
There are additional concerns. The fact of the matter is that individuals, retail investors, departed the market after 2010 in the flash crash, and for the most part haven't returned. They're coming back a bit now because there's a big rally in the market and retail investors come in. But the Mutual Fund Association, the industry group, has done some really interesting studies on how individual investors simply do not participate anymore because it's the market's too unpredictable, too unstable, and a very difficult place to think that you're going to get a fair deal. A really important other factor, though, is that investors like pension funds, mutual funds, money that's been pooled together, they are in the market all the time. They have to stick in there. And the shenanigans of the high-frequency traders, how they deal with that is they ask for more value when they invest. When they ask for more value, that means equity is lower priced, bonds have higher interest rate, and companies, governments, the people who are raising capital end up paying the cost. When I say they pay the cost, what I really mean is, of course, working people pay the cost because it means that the whole economy is less productive. So certainly it does affect retail investors, but it also affects the basic capital raising process of the entire economy.
All right, Wallace Turbeville, thank you so much for joining us and for flashing or putting a spotlight on this issue that I think a lot of people probably haven't heard of before. Really appreciate it.
Thanks so much.
All right, we're going to take a quick break here on RFL. Talk of the Table is up next.